Hi everybody, it's Marcus Collins from MA Properties with another market review. This month we're going to look at the town of Winchester. So what we do with our market review, we look at how the market performed in 2021, but also give you a little bit of historical context in this too, so we can kind of tease out some trends. And then what we finish up with is our predictions for 2022. Now, as I'm recording this, it's February, so it's kind of early days. But we have some insight in terms of what's going to happen based on what happened in 2021, but also what we've seen in the first 6 or so weeks of 2022, which is where we are right now. So with that, let's get started with our Winchester market review. So it's relatively easy to get information today. There's a lot of information and data out there, but it's much harder really to make sense of it and what's all important, of course, to make use of it for your advantage. And so that's why we really do take the time to understand what's going on in the market. As you'll see in a minute, there's an awful lot of information here that we've kind of tried to bring it down into 25-30 minutes probably. But you know, we really do want to kind of look very closely at what's happened, looking at what the big trends are, the macro trends, if you like, in terms of the market itself, but also what's happening in terms of the local town. Real estate clearly is useful, is local, and therefore really for it to be useful you need to be able to look at the market, what's happening in that specific market. And so we study the markets that we work in, some might say obsessively, and they'd probably be right too. So let's take a look at some information. So first question really is, where can I find of it? I'm going to give you a lot of information in the next 30 minutes or so about what's happening in the town of Winchester. I can't cover everything in terms of all of the different metrics and so on, but I can cover a lot, as you'll see. I'll cram a lot in. But maybe you're interested in other towns. Perhaps you're looking to sell your existing house in Winchester and move to an Arlington or a Waltham or maybe an Acton. And so what we've got in our system, on our website, is a lot of information. If you go to maproperties.com, scroll down to the statistics button, the statistics tab, and then kind of look at what we have there. We have about a dozen different statistics for each of those statistics for about 50 different towns. So there's an awful lot of information there to kind of glean what's happening in the market, both real time, if you will, in terms of last month, but also what's happening in the big wider context. And so you can kind of see what's happening in terms of the trends and so on. So again, lots of information. Look at maproperties.com, go into statistics, and you'll see information there. And I'm going to guess that we've got information for most towns that people are interested in, certainly in the greater Boston area. So there's about 50 of them. So, right, back to the agenda and to this evening. I'm going to look at 3 specific sectors in the town. I'm going to look at single family. I'm going to look at luxury. Now, we define luxury to be homes that sell for over $2 million. Kind of arbitrary number, but it's kind of, that's our definition. We've kind of been following that for all the towns that we look at. So $2 million is the key, is the cutoff point to become a luxury sale. And then we'll look at what's happening in terms of new construction, because as you drive around the town, you'll see that there's quite a lot of new construction going on. So we'll see what's happening with the new construction market. And then we'll finish up with some analysis on our 2022 predictions based on what we've seen in 2021 and previously. So let's take a look at single family first of all. First graph I'd like to show you is the inventory levels. Now what this is a snapshot actually at the first of the month of how many homes are available to buy. So at first of the month I go out and I say, well, how many homes are there available to buy? So it gives us an interesting trend to look at. The absolute data, less important, but it's that kind of 10, 15-year trend that's important. And what you see here is 10 years worth of data. And we can glean quite a lot from this. So looking at this, first question is, what happened here? What happened in that 2012, 2013 timeframe? So 2012, those very high inventory levels, was the tail end of the housing correction, the bubble, the crash, call it what you will. but the kind of the tail end of that was 2012. And what happened in 2013, where those inventory levels came way down, is that the buyers finally kind of put the crash behind them, started to look forward, started to have more confidence. So buyer confidence, I'm looking at the data, and this is not true just of Winchester, it's true of a large number of towns. Almost like the switch went on. I'm not really confident about the housing market. I'm very confident about the housing market. And they came into the market kind of en masse, if you will. And so that's why we see this very, very distinct drop in inventory levels as buyer confidence peaked after the housing correction and so on. So we see it in a lot of towns. And that inventory level, so it continued. It had its ups and downs. You can see the seasonality in here as well. The low point here and here, that is the winter months. So the seasonality is within there. And that carried on through 2019. We saw high inventory levels at the end of 2019 and over into 2020. They're beginning to decline in 2020. And as you can see here in 2021, those inventory levels are much lower than we've seen historically. So low inventory levels is one factor that we've seen in 2021, and certainly lower than we saw in 2020. But that's kind of not the whole picture. So let's look at it from sellers, how many sellers there are in the market, and how many buyers there are in the market. First graph we look at here, or second graph we look at here, looking at really how many sellers are in the market, is how many home sales were there. And as you can see, we've been at about the same level really for the last arguably rather longer than that, 5 or so years. 234 existing homes, I should say. Blue is the existing homes, and the green at the bottom, that kind of lime green color, is new construction homes. So the aggregate there, around about 240 homes is how many homes sell in the town year on year. And it's been relatively static. I mean, there hasn't been a large increase or a large decrease in the number of sellers in the market. That's not true of all towns. And as I think about Winchester, I think about the surrounding towns at about the same price point. I think of Belmont and Lexington, for example. What those two towns have seen is a large increase in the number of home sales. That's a consequence of house prices rising, of course, and so sellers feeling confident that they can sell their existing home, downsize perhaps. I'll talk more about the kind of demographic shifts in a moment, but feeling confident that there's sizable price appreciation in the home and therefore selling the home. We've not necessarily seen that in Winchester. With that kind of static, about 240 home sales over the last 5+ years, actually. So it's kind of interesting. So first thing we would say in terms of the market is static number of sellers in the market. Now let's look at it from a buyer's perspective. Is there a static number of buyers or an increased number of buyers? Well, unsurprisingly, of much of the discussion, of course, there's an increased number of buyers in the market. And we're looking here at the average days on the market. And as you can see, we were at 46, 43 in the last 2 years, but that's dropped down to 31. Now, it can get lower than 31, but that's a substantial drop from what we've seen previously. And so that's indicative of a large number of buyers in the market. So I'm starting to kind of go towards here a strong seller's market. But let's look at one more ratio to kind of see if that is actually the case. And this is the ratio of the sell price to the list price. So imagine a home comes on for 900,000, sells for 900,000. That's 100% sell price to list price ratio. As you can see, Winchester's been around about the high 90s. It doesn't usually get much lower than that. Even in 2012, it was only 95. But it really hasn't changed that much, as you can see. But look what happened in 2021. Went from 98% to 101%. Now, that doesn't seem like a large rise, but it actually is historically. You say it hasn't gone up and down by more than probably 0.5 or 0.6%. So a substantial increase in that sell price to list price ratio. What's interesting, though, is to look at what other towns' absolute value is. So I talked about Lexington, Belmont. Lexington's is 106%. Arlington, different price point, although Arlington's prices are rising quite sharply. And whilst they are still lower than Winchester, they're kind of getting there, if you will, in terms of price. That was at 109% in 2021. So 101 is not that strong a market. There are lots of buyers out there. We've got relatively static inventory or static number of sellers. And so we would have expected, and I was quite surprised to see that ratio was only 101. I would have expected to see a higher ratio than that. Other towns, as I say, I've just mentioned Lexington and Arlington, two adjacent towns, 106 in Lexington, 109 in Arlington. So I think it's fair to say that 101, a little disappointing given what we're seeing, given the number of buyers in the market and the lack of sellers, if you will, in the market too. So that was kind of a little disappointing when we were looking at this data, a couple of weeks ago. In terms of how that kind of plays out through the year, you can see that in the bulk of the year, the ratio is higher, and I should explain this graph. What we're interested in here is the orange line here. That's the sell price to list price ratio, which is this axis here. This is the number of homes that sold. It rose quite quickly into that 102, 103 ratio, but began dropping in that kind of July time frame, and so it came down. It just picked up a little bit in December. But that's a relatively, we would expect that number to have kind of come up and stayed at a higher level as the year went on. Having said that, we have actually got, as I now think about prices, we have actually got some price appreciation. Quite small, of course, in that 2019, in fact, they dropped in 2019, which is a real surprise. Rose a little bit in 2020, but we've seen a 7.5% rise in price appreciation in 2021. And that looks to be a relatively accurate number. Sometimes that average price clearly can be skewed. It can be skewed if we've got, for instance, more higher price homes coming on the market. And I'll show you later on that actually isn't the case. If I look at the median, that's increased to 1.35, and that was a 7.8% rise. So we're getting truer price appreciation here. If I go back, there we go. If I go back, average price at 1.425, about 7.5%. So that does look to be a true price appreciation over what we saw in 2020. But we did see that dip in 2019, and quite a substantial dip actually in 2019. So house prices, yes, they're rising, not rising as high as many towns in the area though. So that's kind of worth highlighting. So prices up though, no question, in the area. The next graph I like to show is the cumulative sales graph. And so we began plotting this during COVID because it gave us a sense of how it was impacting the market real time, essentially. And what this does is it plots how many homes went under agreement cumulatively, went under agreement in any given week. What's interesting, as you look at the red line here, which is the 2021 data, rose steadily until about that kind of August timeframe, leveled off, and then rose again. And that's what we would expect to see in the normal seasonality. Homes coming on in the spring market, a relatively lull during that July and August timeframe, July and August, and then it would rise again as the fall market came in. So we're beginning to see that seasonality kick in, which interestingly we're not seeing yet in many other towns, which have seen a steady rise in the number of homes which get listed and therefore go under agreement. We're really not seeing that slowdown that we would ordinarily get, the normal seasonality in that summer market. We are beginning to see that in Winchester, and that I put down to the difference in strength, if you will, for want of a better word, between the Winchester market and some of the surrounding towns, which have really seen substantial number of homes coming on the market and therefore going under agreement with lots of buyers out there. So we've got back to the more regular, normal, if you will, market far quicker in Winchester than we have in some of the surrounding towns. Let's take a look now at the luxury market. As I say, I define luxury as homes that sell over $2 million. So that's the cutoff to get you into a so-called luxury sale. That's risen substantially, of course, since 2012 here, as house price appreciation, of course, has grown. But still, this is more than house price appreciation kicking in and homes dipping over $2 million. Substantial increase. 2019, though, interestingly, much lower than the years around it. And we've seen, relatively static 30 or so homes selling over that $2 million in Winchester, 2018, 2020, and 2021. So no sizable increase, but not necessarily a reduction as we saw in that 2019, which really was if you like, a lot of new construction homes coming on. The green in this graph is new construction, I should say, and blue is existing homes. A lot of new construction coming on in 2018. That dropped off in 2019, which brought down the number of luxury homes that sold. So again, very similar to the market we've seen for single family homes, relatively static in terms of that. Interesting note to look at the average days on the market. If you look at sort of towns that have a large number of over $2 million homes, the days on the market for luxury homes is usually much, much higher than it is for existing homes. In Winchester, that's not the case. So the over $2 million market has performed as well as the market in general. So that's interesting to see. That's down to the fact that there are not that many over $2 million homes, and they're not that expensive, as I'll show you in a moment, the distribution. So there aren't that many homes which are 2.5 or 3 or 3.5. The town doesn't seem to be able to support homes of that price, unlike some other towns. But that the luxury market performing as well as the rest of the market, which is performing quite well, not very well, as other towns have done. In terms of that all-important sale price to list price ratio, sitting at about 100%. Again, very similar to the market in general, which is sat at 100. So it's performing, again, another proof point to show that the market is performing as well as the market in general. So in terms of that kind of distribution, some difference, of course. So what I've done here is I've plotted how many homes sold in each price point. I've broken it out by 2 to 2.5, 2.5 to 3, and 3 and above. And as you can see, the majority of homes over 2 are in that 2 to 2.5, relatively low number in the 2.5 to 3 and 3 and above. Only 8 homes there, as opposed to 5 homes. So very much this is the area where the kind of the sweet spot, if you will, for the luxury homes is in that 2 to 2.5 million. That's where the market seems to be, favoring in terms of those over 2 million. Gets kind of rarefied once you get over that 2.5 million. Very few homes selling at those higher price points. Turning now to new construction. Interestingly, with new construction, the number of new construction homes in 19, 20 and 21 very much lower than we've seen previously. 16, 17 and 18. So that's interesting, because what we suspect is happening here is the builders are doing two things. First of all, it's difficult to buy the homes that they're going to tear down to build a new one. Ultimately, I mean, house prices are rising, but they're not rising at that 2.5 and above price point. And as the average price of a home, which would ordinarily be a so-called tear down, rises, so they're getting kind of priced out. Once you get over about a third to acquire the tear down, that's kind of where the builders want to be. A third for the acquisition, a third for the building costs, and a third in profit. That's kind of the rule of thumb, if you will. So imagine a home sells for 2.1. They're looking to pay about 700,000 for the home that is going to be torn down. If the sweet spot is up to 2.5, you can see that we're looking at somewhere between $700,000 and $800,000 is where the builders want to be buying those homes. That's a very competitive price point. in all towns really. And so we got an awful lot of competition for those homes that ordinarily in a weaker market, if you will, would potentially be targets for the builders. So the builders are struggling somewhat to buy houses at the right price. And of course, if they can't sell more expensive homes, it puts a gate really on the homes that they can buy. So if the homes they would ordinarily buy are starting to cost $900,000 or $1 million, it's hard for them to justify a $3 million new construction build just because the market is quite strong, quite weak once you get over that 2.5 million. So I'm not surprised that the number of new construction is declining. It is just a consequence of house price appreciation, if you will, and the builders in many cases being priced out of the market because they can't build the really expensive homes that they need to justify the acquisition price. So that's why we're seeing a reduction in the number of new construction sales. Sorry, there was a lot to that, but actually, if you're interested in this whole topic, we just wrote a blog post about new construction, about teardown pricing, about off-market teardowns, on-market teardowns, and so on. I wrote a blog about that a week ago. Recommend you take a look at that if you have any interest in what's actually happening with the teardown market, kind of in the area. In terms of that distribution, again, similar to what the distribution what we saw on, or the same graph, if you like, in terms of what we saw on the luxury market, you can see that there was last year there were a couple of new construction homes over 2.5, one over 2.5, one over 3. There were seven. There were 7 in the 2 to 2.5, nothing 2.5 to 3, and nothing in over 3. So that area there is where the builders need to build, but they clearly don't have the confidence to do that, and so that's why the number of new construction homes has declined. 8 over 1.5. Again, here we had 8 over 1.5 and so on. So you can see what's happening in that new construction market there. In terms of the average price, it's not risen very much either. The average price of new construction, it went from 1.829, 1.858, basically flat, rose slightly in 2021 to 1.924, but that really isn't a substantial price increase that we really do need to see for more new construction homes to be built in the town. So that's kind of again indicative of that market that developers are struggling or unwilling to build in the town, are looking at towns in the surrounding areas. So that's what's happening with new construction. A little bit of back to what's kind of happening in the market. Take a look first of all at distributions. I'm interested in the two distributions, this is 2020 versus 2021. I'm interested in this because I want to see if there's been some big skew in the data that would impact that price appreciation. In fact, the median and the average increase was about the same. Says there really wasn't. You can see it here. A little bit more in that 1.5 to 2. 2020 is on the left, 2021 is on the right, but the shape of that graph is very much the same. In terms of the 2 years, and so from this we can give some assurance that the increase we've seen in the average price is true price appreciation as opposed to some skew that was occurring. Interestingly, though, the number of under $1 million homes reduced quite substantially here in comparison to 2020. About the same number of homes in the 1 to 1.5 million, and then 20 more homes in the 1.5 million to 2. But that's quite interesting that in these lower price points, I say lower, under $1 million price points, we've seen a pretty substantial decrease in the number of homes that actually sold, which is interesting. Another way to think about how strong the market is and so on is to look at the distribution of that sale price to list price ratio. And so what I've done here is I've bucketed how many homes sold in which sale price to list price ratio. In most towns, 100% is the center. That's always there are a large number of homes that come on the market and sell at the same price. That's 100% there. But as you can see, we've got about 60% selling over or at 100%, and about 40% for less than the asking price. This 60-40, 55-45 ratio is about what we would ordinarily see in a normal market. And by normal, I mean pre-COVID market. If I showed you the graph here for 2018, perhaps, it would look about 50-50, 45-55 kind of ratio. So we're not that far away from a normal market. A bit like I was mentioning in terms of the seasonality, that's beginning to show the normal seasonality. This graph here is beginning to show the normal seasonality, the normal distribution. For example, to give you kind of an example of towns that have a long way to go here, Arlington has 80% of homes selling for at or over the asking price, and about 20% for less. That's clearly a very, very strong seller's market. Lots and lots of buyers looking to buy in the town. Lexington, next town over, 70-30, 70 selling for at or over the asking price, 30% selling for less than the asking price. So not as strong as Arlington, very few towns are actually. I picked those two towns because they're kind of the adjacent towns, different price points clearly. But it does show you that there are towns where there are still a large number of buyers looking to buy in that market, driving prices higher, pushing that ratio so that more and more homes are selling for at or over the asking price. We are getting slowly but surely back to a more normal market here in Winchester. And so that's the way to think about this distribution. In terms of the wider perspective, in terms of what's happening in the market, two primary effects. The first one really is changing housing demands. We've heard a lot about working from home, how many days people are going to work from home. I need one office, I need two offices, and so on. And that's changing buyers' demands for the home that they live in. It's also reprioritizing the home, I feel too. Whereas commute was very much the most important thing, schools is always important. I'll kind of put that to one side. That's always a kind of very important aspect of which home or which town to move into. Commute came pretty close. Now with commute being perhaps 1 to 3 days a week as opposed to 5, commute's becoming less important. The house itself, what the house brings, requirements around beds, baths, offices, yard space, and so on is becoming much more important. And so we're seeing that an awful lot of change in terms of housing demands, and that's driving the market. Sellers looking to sell their existing home because it just doesn't work anymore, and then buy a larger, or in some cases clearly a smaller home, and so on. All of that is kind of creating some demand in the market, and that's, if anything, in most towns, the overriding effect that we're seeing. And that's certainly, for example, what we're seeing in the very, very strong market that we currently have in Arlington. That's very much kind of playing out there. But as well as that, there's kind of an underlying trend. And if we were giving this presentation back in 2018, I have actually, as it turns out, but back in 18, this is what we would talk about. We would talk about the demographic shifts that we're seeing. And what you're seeing here is what's called a population pyramid. How many homeowners are in which age bracket? Actually, which people, not just homeowners for that matter. How many people are in which age bracket? There are two bumps, if you will, areas of this graph which are important, two age groups which are important. The top yellow bar is the baby boomers. Those are the children born after World War II, now beginning to get to retirement and therefore downsizing age. Downsizing, they're looking to sell and they're looking to buy a more affordable home in general. The lower yellow bar is the first-time home buyers, the so-called millennials, looking to buy their first home. So you can see that this was the overriding effect, if you like, a macro effect in the housing market. Downsizers looking to sell and buy a more affordable home. First-time home buyers to come into the market and buy, that home. This is one example really why Arlington's a very strong market. Downsizers and first-time home buyers find it very attractive. Not just Arlington, but many of those more affordable towns close into Boston. So this was the overriding effect that we were seeing, macro effect we were seeing in the market. As I say, This will come back, and we are to some extent beginning to see this coming back in some towns. It is to a large extent in most towns being overridden by the effect of the kind of tail end of COVID in terms of changing housing demands. But this will be back. It was here in 2018, it will be here in 2023, 24. That's kind of as we get back to the kind of more normal situation. The other thing to look at is kind of a lot of talk, if you will, around mortgage interest rates, about which way they're going, how high they're going to go, what will the impact be on the housing market. And I thought it was useful to put this graph in because blue in this case is the historic and green are the predictions for the next 12 months or so, or the rest of 2022. As you can see, even the predictions, and this was done like a month ago, I think I pulled this together. As you can see, they're predicting rates of around 3.7% or so, 4%, let's say, by the end of the year. That's still a lot less than we had, for example, in 2018, and certainly a lot less than we had back in 2009, 10, 11, and so on. And so I don't see interest rates being having that much of an impact on the housing market in general. Having said that, what level do they actually have an impact? There's much discussion around where that number is. 5.5% is what we were being told not so long ago. That's when it begins to have an impact on the market. But if you look at this, we're a long way away from 5, let alone 5.5%. And so I really don't see mortgage rates, even as they rise over the next 12 months or so, actually having that much impact on the market. So that one I think is less of a concern. It's really those changing housing demand requirements as well as the demographic shifts which are really driving the market and will continue to drive the market. So what does that mean for 2022? So there are a large number of buyers in the market, that's for sure. Homes that are coming on the market now in February, we're seeing lots and lots of buyers going through the open houses and making private showings and so on. So it's clear that there's a large number of buyers in the market who were unsuccessful in 2021, unsuccessful in 2020 in many cases as well, but certainly unsuccessful in 2021 when they decided to kind of jump back in the housing market. They are still here in 2022. So anticipate that we'll have as many buyers in the market in 2022 as we did in 2021. In terms of the number of sellers, we have to look at where they've been historically. House prices have increased. That would ordinarily bring more sellers into the market as they look to profit take, if you will. But we've seen a relatively static number of sellers in the Winchester market for the last 5-7 years. So there seems no reason why we should see a substantial increase in the number of sellers. And so we've got a static number of sellers, same number of buyers, but an elevated number of buyers than we've seen previously in 2018 and so on. And so expect to see similar market conditions in 2022 that we saw in 2021. Already we see we're getting back to that seasonality of spring market, summer slows down, fall market. We're beginning to see that sale price to list price distribution begin to shift back to that closer to parity, 50-50. So that kind of number. So we are beginning to see the normal market conditions that we've seen previously come in already in 2021, and that will just accelerate in 2022. So similar market conditions in 2022 to what we saw in 2021. So don't anticipate anything one way or the other, if you will. It's a strong sellers market, not enough sellers in the market. Buyers looking in Winchester, but also looking in other towns and finding they have to because there's a lack of inventory in the town. So that's kind of our predictions for 2022. So thank you for listening. Hope you enjoyed this. And we do this because we really do think our clients deserve to be the smartest person at the closing table, because once you understand what's going on in the market, we all benefit about understanding that kind of buying and selling process. So that's why we do this, to kind of educate. As I said, we have lots of information, not just about Winchester, but about other towns. So if you have any other questions, any questions about what I talked about this evening, please feel free to reach out to us. We have lots of information. We love to talk about this, as perhaps you can imagine. So please do reach out if you have any questions about what's happening in the market. So with that, I'll say thank you for watching, and hopefully you'll watch the next market review we do in a month's time. Bye.